feel responsible, of being able to bring all sides together, etc. And it's so difficult because they do have differences and divergent views on many of the world politics. So, but it's always
Yes.
that feel that everyone has to come back to Brussels to be able to talk and find solutions on everything, from energy to economics to politics.
Difficult times right now, both politics and economics.
Yeah, and you feel like whatever happens, like the worst, like is on Europe, now with Bab el-Mandab, like everyone talking like it's about the liquids, the diesel, etc. That goes from to Europe more than it's being like the crude that is going through that to Asia. So again, like the European market being hit by, we don't feel it yet. There is no panic, but like whatever happens, it seems that Europe is the most affected, for whatever reason.
Yeah.
Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. We are the last day of January. Where did January go? Another one of those years where everything flies by before you know it. It's summertime, and Peter McGuire is not on the beach, and we are. Yay! Brent crude oil trading this morning a little bit down, a little bit soft. Sort of insignificantly so, one might say. Brent crude trading at 82.65, just down about 0.25%, with WTI about $5 back from there. Let's kick off this morning with Laurie Hatayan, the MENA Director, Natural Resource Governance Institute in the exotic capital of Belgium, Brussels, always a very exciting place. Laurie, in our neighborhood, things are perhaps a bit too exciting at the moment. I wanted to get your thoughts on the sort of question of the week for me, which is ultimately whether the world or the energy markets, most particular to our interests, now assess the Middle East to have a regional conflict as compared to this tragic but contained situation in Gaza. And we're all waiting, like waiting for Godot overnight. Joe Biden has decided what he's going to do to retaliate against events on the weekend, but yet to announce them. Your thoughts on what that looks like and going forward, how you see the region from the perspective of Brussels, obviously an important capital in the world, and this idea that this is no longer a contained situation.
Look, I think this is the most difficult question about like where are we heading with everything that is happening. Definitely from where I'm sitting, like everyone is trying like to think about the future, to think like if there is a role for Europe in that future. But it seems that they still think that the solution is not ripe, and therefore like we don't hear like they cannot like really force everyone for a ceasefire so that the day after they go and sit and find the solution. But what I think is everyone is waiting for what will be the Biden attack. Will it be I guess the equation now is like, will they do a direct attack on Iranian interests, or is it going to be in the buffer zones or in the proxies areas, like being an attack in Iraq or in Syria? This is what everyone is talking. And if this is like an attack on these places, again, it will be contained. It will be seen under that what we are seeing now, that yes, there are wars, yes, there are fires here and there, but no one wants to escalate. No one can take it to escalate, especially that now we're in the middle of elections, right? So now January is gone. As you said, soon it will be summer and then it's November. So we have at elections, and definitely Biden doesn't want to do something that will hurt him or hurt whoever is going to be the nominee, because now they're talking about most probably Michelle Obama being the surprise nominee of the Democrats. So if that is the case, they definitely don't want for Michelle Obama to enter with a whole war in the region that has been escalated. So for everyone's interest, it is not to escalate and keep it as it is, like fire here and there, but without like the big fire. No one can take it. The Iranians definitely cannot take it. The Iranians are really are the most powerful in this, even though the attacks they are taking, even though the casualties they are taking, but they are controlling very strategic points and very strategic proxies that they have, that they don't feel that they need to go more than that and lose more. They have already sacrificed Hamas. For them, that is more than enough. And for the Americans, they cannot go to war when they have to secure elections and knowing that Trump might come back.
I suppose that is the big question. How much, A, does Iran control its proxies, and B, how much they're willing to do so? But Peter Maguire, CEO of XM Australia, meanwhile, back at the ranch, the IMF is seeing bright flowers ahead and raised a global forecast for global economic growth in 2024. They just announced they expect a 3.1% global growth this year, up 0.2 percentage points since their October estimate. That's all good news. That's all bullish, I suppose.
Absolutely, Sean. And yeah, I think India is really the leader there. And welcome to everyone. Happy to be back with Gulf Intelligence. I think that's the situation. They've been having good numbers coming out of the block, Sean. So that's been a little bit of uplift. The overall theme, yeah, Asia's still moving along fairly well. And you're seeing the sort of numbers coming out of, South America are reasonable as well. So yes, I can understand why they're suggesting that. The other side, of course, is what are we going to experience over the next, say, 60 to 90 days before you even get to election, in the mad electioneering situation, the circus really starts to come to town with the US. But what happens with the Evergrandes? Where does the property sector go in China? And do we see a continuation as far as downdraft, as far as Chinese equities, the likes of the CSI 300 is off 1,000 points in a year, or about 25%. So is that continual downdraft going to really materialize, and who's holding the debt?
Paul Hicken, Editor-in-Chief of Petroleum Economist, also welcome back. Paul, we're in the month of January with Brent crude oil averaging around $78 a barrel. OPEC Plus will take that. I mean, despite all the dramas that we talked earlier with Laurie, the oil market is fairly sanguine.
Yeah, that's right, Sean, and thanks for having me back on. I'd like to say, yeah, it's weird. It's never has been the geopolitical and the economic outlook been so uncertain, yet price has been more stable in a way. It's an odd situation to be in, but there is a fragile balance, I think. And look, it's all about how much risk is priced in, how much these situations are priced in. We talk about the IMF outlook for global growth, and it seems like that is where the market sees things. But I think if you look at where the risks are, they're all to the downside. China's still a big risk. Everyone is expecting from US that, interest rates will start coming down this year. It's all about timing, how quickly those interest rates are going to come down, how inflation is going to be controlled. And everyone's expecting us to be for a low level, but from an outside perspective, at least, not the genocide in Gaza, but from a low level, from an outside perspective, risk in terms of disruptions to oil barrels. Again, the risk is again to the downside. The Strait of Hormuz, we don't talk about that. We talk about just Bab al-Mandab, but obviously the risk is Strait of Hormuz, 20 million barrels a day of oil going through that. Obviously, it's very well protected. But at the same time, that's still the risk that's not being really priced in. And again, it leaves a low level, but still a potential for the downside there. And I think when people talk about OPEC spare capacity, more than probably 4 million barrels a day in spare capacity, that talks about production, that talks about output, not in terms of supply. And supply is the way there's the likelihood of disruption, not in terms of output so much. So there are risks to the downside from a political and economic perspective. And I think OPEC are just trying to weather that storm, and they've got their own issues, haven't they? I mean, with unity.
Well, it does feel in some ways that the floor here is the the geopolitical risk. It's the IMF giving us an extra few bumps to the global outlook for economic growth, and then the sort of the containment is the 6 million barrels of idle capacity. Between those two things, there isn't really scope for a lot of movement.
No, it's exactly. And OPEC, in some ways, will be happy about that. I mean, they've got their own tough situation. They've been doing these voluntary cuts. They've had Angola depart. It's, they're trying to keep the balance as much as possible through the first quarter. But after that, they're really hoping for demand to recover, those IMF forecasts to be true. And so they don't have to do an extended, deeper production cuts, because it would be a real test of OPEC at that point.
Well, it seems that they're certainly the reading the tea leaves on the November meeting. There's certainly a bit more stress there than there was meetings that lasted minutes to then lasting weeks. Laurie, I wanted to get your view from Brussels vis-a-vis some of the geopolitical posturing from there in terms of there is the election this year of the European Parliament and of the President of the Commission, Ursula von der Leyen, and then we have the sort of the recent move by the US to at least, I think, sentimentally postpone licenses for further LNG exports out of the US. Obviously, Europe becoming heavily dependent on that. And then you have the Ukraine thing on the other side of that coin of the US LNG rescue and then the Ukraine crisis. Where does these things look like they're going for the EU, for Europe, as the year unfolds?
Look, I think every problem in the world is impacting negatively Europe. And I think they do feel that, even with what's happening in Bab el-Mandab, most of it's like diesel or other liquids that go to Europe that are affected more than the crude, for instance, from Russia to Asia. There is no panic sentiment still on the LNG pause that the Biden administration has called for. We don't feel like there is a panic mode. Definitely the panic mode.
It's a mild winter. There's lots of storage of gas.
Exactly. That's still the story. And definitely it looks like a mild winter, like with 11 degrees in end of January. So that's very mild. But I think Europe is marching towards the energy transition the most in the world. And everything that happens, it's a reason for them to say, you see, we need to be independent in a way. And for them, the Green Deal is the solution for all the
problems. But yet they don't seem to be able, the billion-euro budget that was approved for the sort of the Europe's version of the IRA, they don't seem to be spending it or putting it into implementation.
Look, because everything takes time with them, with the bureaucracy, etc., and that fear of like the change that is happening. But it is pushing them because they are in this position where, as I said, whatever is happening worldwide, even from friendly states, it is affecting them, kind of like pushing them to a transformation that is going on. So this is the feel that you have. And the most of like for the elections, I think the more they are very the anxiety is about the right and the far right that might rise, and that might change a bit the composition of the European Parliament. That is a real issue for them. Having Trump back, that is an issue for them. So for Europe now, they're not panicking, but definitely they are worried about like the future of.
Is there any question around Ursula von der Leyen? She's pretty guaranteed to be restated.
I cannot say, but maybe in the next months I can have a clearer picture, but I don't know now.
Yeah. Peter, we mentioned in your earlier comment there, China, the outlook for China continues to be a little bit softer. From our forum outlook for the year ahead sessions, that seemed to be counterbalanced by very optimistic outlook. You mentioned India, we've got Vietnam, we've got Indonesia. There's other big centers, not insignificant countries, 100 million to 200 million to 300 million populations that are looking to pick up on that. From a demand side of the sort of balance sheet, Asia should remain fairly solid this year, despite China's uncertain wave. What's your outlook there on the average across?
Well, absolutely, Sean. But the other, and you've got to look at Africa as well, the likes of Nigeria, massive big populations that certainly are performing quite strongly. So, we look at China as the big picture, and I'll just say this. China's going to impact the likes of Australia, Brazil, and of course from an ore production and for base metals. Because if this property sector really starts to bite, and we're pretty sure that it will, then this is going to be a long, protracted play out. So the producers,
the fact that they put the Evergrande into liquidation,
yes.
What dominoes does that push over? A lot of people unpaid debt?
Yes, of course. You've got the likes of suppliers for, electrical suppliers, anything that goes into these buildings. Terms of agreement, pay me in 6 months. I can't pay. We'll string it out 9 months, and now the impact all the way through. So all of those supply chains,
and there's no bailout in the middle of that, like we saw in the US and other places.
Well, this is the issue, because Hong Kong said liquidation, so it rests now on China and how China plays this. And this is going to be observed, and who's holding the debt. 120 international banks and 180 domestic banks, and that's the fabric as far as debt holders. And so in turn, people sell debt or people sell risk. So how many other banks globally are wrapped up in all of this? There's the first part. The second part is you need strong consumption, like it or not. You mentioned Vietnam, and we look at all these different countries, and Indonesia, they are producers. They produce stuff, but they need to export that, a lot of it. Sure, there's some domestic demand, but it's nice to export as well. And you need strong growth in, from a global footprint. And this is the issue that we're facing with high inflation. People have got less firepower in their wallets and purses. So, consumption's down. We're looking at auto sales. We're looking at other parts of industries that are really hemorrhaging. And so hopefully they're going to...
All those regional countries, all of them, including Australia, need a strong China to absorb all of those commodities that they're producing.
Absolutely. They're the engine, and then naturally the finished product goes back out. So it can be pig iron going in for steel production, and then, that's being sold out. So that's exactly right, Sean. From infrastructure to rebuilding of nations. I'm in India next week, and you want to see construction, go to Mumbai. Spend 4 or 5 days in Mumbai. It blows your mind. And so India is going through that as well, that transformation. They're just probably 30 or 40 years behind China in a lot of ways, but they're galloping quickly. So this is where it's going to be a fascinating, 24 and 25 as far as growth numbers, and that rolls into naturally,
And
IMF.
where you see that, we see this, Paul, we see this incremental growth forecast for the year ahead, which is, give or take 1.5, 1.6 million barrels a day. How much of that will be in Asia, and how much of that growth in demand will be met by non-OPEC plus? It looks like OPEC Plus will have to hold their fire again right through this year. Your thoughts on that, the incremental demand growth in 24, and who's going to consume it?
Yeah, that's the big question. I think you look at where non-OPEC supply have come through as well, like US barrels surprised to the upside. Got Guyana, Brazil, Norway even. There's a lot of non-OPEC supply out there. It's making it even harder for OPEC Plus. They're a victim of their own success in some ways. And
in what ways would you put that context?
Because they've kept prices high enough. Prices are high enough to spur that supply. It's galvanized. You've seen the big mergers last year with ExxonMobil and Pioneer, Hess. There's been huge amounts of interest still in terms of in terms which wouldn't have been able to get
Which
over the
seems to
line.
bring some of the stress into OPEC Plus, because the higher oil price drives more development in the shale basin, Permian, and so forth. And of course, the more shale oil you produce, the more gas you produce, and then presto, you've got big LNG exports coming out of the US, which Russia doesn't love, by the way.
Yeah, and I think it's an interesting one because gas is also the big story, isn't it? Really,
Yeah.
I mean, you see it with the US, where never has being the number one exporter of oil and gas looked so bizarre for the US in that sense. Potential freeze on LNG.
I think it's important to really be clear of what the Americans have done. They've put a pause on issuing new licenses for new projects. I mean, it is really the least ticket you could pull in satisfying green activists, because ultimately these are projects that even if you license them today aren't going to see action for 5 years. So it's really irrelevant. Everything else is still under green lights, existing projects, current exports, etc.
Well,
So I think from a US Joe Biden point of view, it was an easy one to give away to some of his base.
It's true. It's irrelevant from that perspective, but I think it does show a lack of clarity and how they're getting tied up in knots over this. They hit the Willow project as well. Again, they flip-flopped over that. And I think when you talk about a clear way of view of fossil fuels and a clear way of looking at investment, it's been problematic. The COP28, they missed off.
And certainly you would think Europe has to think about whether they put all their eggs in the US basket, because in a heartbeat it gets turned off, and that's another day's thought. But ultimately, go back to Putin seems to be the inevitable outcome here. Let's go to the survey question and get a sense about where we think this market is going. Brent crude oil has averaged around $78 a barrel in January. What will it average in February? Closer to 70, 75, 80, or 85? Is it going to drop away again, or is it going to keep going up? Thoughts on that? Laurie, big news yesterday. We haven't even mentioned it on this call. It happened just a few minutes before we did the podcast yesterday, so we had a chance to bang it on the head a little bit. But Aramco abandoning its plans to add 1 million barrels a day of capacity. That's a huge decision, given that capacity was destined to come on stream in 2027, I believe. Your thoughts on the decision, what it tells us about Saudi's thinking, about the markets?
Look at NRGI. We've been working on national oil companies and how national oil companies work. And our latest publication was about how the energy transition will affect decisions of national oil companies. And definitely there were since yesterday, I've been reading a lot of analysis of a lot of people, some talking about this is the energy transition effect, some talking that this is about more efficient management of finances, more talking about other stuff. Everyone has a lot to say, and maybe it's about everything. So basically for Aramco so basically we understand that this is the decision by the government and not by Aramco itself. So the government has plans, and it's always, you have to look at 2030 and the target in 2030 and how to get there. So if the money that is going to put in Aramco could be put in other projects that would be more beneficial in the future, instead of raising that capacity to 13 million and then going around and trying to find buyers for that, then you put it in other things, especially that now the discussion is all about that inside Saudi Arabia, with all these new green projects, especially for power, electricity from renewables, etc. That means that there is more capacity from the consumption, internal consumption. So instead of using what they're producing, they will be selling that. So on top of that, so you have within the production, you will be having more to export because you're changing your energy system. In that case, it makes more sense to really put that money into other things, especially that Aramco is going into downstream, is going into other projects than just like investing it in upstream. So you can read it that way. And with what is happening with the LNG poses, even if it's new contracts, and with Aramco, you see that energy transition is becoming a reality that companies and countries have to face about the future.
I mean,
that
are
will
we
be
talking
less.
peak oil demand? Is that what you're saying when you talk about the energy transition? That, I mean, Saudi Arabia is already carrying, I don't know, what is it, 3 million barrels of idle capacity at the moment?
Yeah, look, peak oil demand is like now. Yesterday, I was reading something from Rystad, which is considered like a very accurate in there, and they're talking about 2026, 2027 peak oil. Gas is a completely yes, they're saying it's different, but like for that, and then all this transformation, all these projects on renewables that are affecting directly the electricity generation, all these investment in EVs, the electric cars. So all of that is creating some changes, even if it's not like that direct or the speedy accelerated transition, but it is like something that is happening in many places, and it is affecting kind of. So in that context, it makes I think sense for Aramco, for the government of Saudi Arabia to take that decision.
And I suppose also
wants to get 2030 with achieving what he had promised, which
exactly.
Would be like
I mean, this is a very expensive initiative to add 1 million barrels of capacity at a time in which you need your dollars for 2030 vision. Peter, your thoughts on this decision and where you think this question of idle capacity goes this year versus OPEC quotas. I mean, there is increasing tensions emerging there. We lost Angola out of the group. UAE are carrying increasingly a large amount of very expensive idle capacity.
Absolutely, Sean. By the way, I'll be going. I was formally invited by Mukesh, our dear friend from Rystad, and Jaron Rystad will be talking tomorrow in Sydney. It's a 3.5-hour event starting at 2 p.m. and I'll be attending. I was invited and I'm looking forward to that. So you can imagine the depth of knowledge from gas to oil to, and I think it'll be summarized with closing comments by none other than our dear friend Mukesh. He sends his best also, Sean.
Yeah, no, I had the pleasure of going to their session here in December with Jaron, and it was very, very insightful and useful.
Yes, absolutely. So I'm looking forward to that. Yeah, so the OPEC, we've got, Thursday, and that's tomorrow. Unlikely to announce. I've just made some notes here, any changes to output in February. Production cuts around that 900,000. As you mentioned, Angola, these are the situations. I think it's a very much a fine line at the moment. You've got the situation with geopolitics, and that's very much, across everyone's mindset, what's happening and whether this escalates or it doesn't escalate, and what happens with Red Sea and shipping and so on. So as I think it's very fluid at the moment, Sean, and this creates the uncertainty as far as price. That's why, your questionnaire today, the 4 prices. This is the dilemma that traders have. Everyone's got a different mindset. Is it going to be 75? Is it going to be closer to 85? I think it's going to be higher, and I think there's good reason for that, but everyone's got an opinion, and that's what drives futures markets. So yes, at the moment, Sean, I'm keeping a close eye on what OPEC say tomorrow, and of course where the Fed come out tonight, and the overall views over the next couple of days, I think could be quite interesting for naturally futures markets and for the oil complex.
Closing comments with you, Paul. Again, similarly, your thoughts on the Saudi announcement. A bit of a surprise and a major amount of new capacity that now won't be coming this decade. And your thoughts. Majority of people in this room see it closer to 80 in February.
Well, I think, first of all, it is reversible, so that could still happen. Remember that to start with. This is just, and I think it's Saudi. It's maybe not so much of a surprise when you look at how much Aramco and Saudi Arabia have been looking at gas and blue hydrogen. They really want to be a big player in those spaces. They've made a lot of comments about that. They bought MidOcean as well. And they really want to become a big LNG player, utilize those gas. It's been on the card for a while, and the shift in transition, the mood in transition has meant that, you know, look at China with EVs, and there is a kind of a sensible shift in Aramco's thinking and the Saudi kingdom's thinking in terms of being a holistic global energy player rather than just an oil player. And they have all these resources. So,
well, it's the economic opportunity, right? Not just before maybe there was tokenism towards the green transition, but now there's a realization there's big bucks to be made here.
But also it makes sense in a sense that there is also the risk, you know, there's also the argument that this is the ultimate Saudi put, trying to raise price at the back end of the curve. You know, again, we go back to be careful what you wish for, to the IEA and the environmental policymakers. You know, if you don't want this energy security of supply, we don't have to provide it. We can spend our money on elsewhere. But with the caveat that it could always be brought on in a 3-4 year window if needed. And that'll be key to look at what happens towards the declining fields, what they plan to bring on in terms of those specific fields, and how they maintain those fields over the next 6 months to a year, and what sort of they reveal about that. And that'll be key. Well,
we'll have to wrap it up there. Brent crude oil trading sort of a token down this morning in Asia, 82.56, down a third of 1%. I think that everybody next waiting for the next shoe to drop in the Middle East geopolitical tensions, and that is what President Joe Biden will be, how he will react to the events last weekend when 3 U.S. soldiers were killed in the Middle East. The expectation is that from Washington that there will be a reaction. What does that look like? Is it escalatory, or is it still in that containment box where everybody can say, okay, I got slapped back, but I didn't get bonked on the head? We'll have to see. Thank you so much, everybody, for your time this morning. Wonderful to have Peter McGuire back from XM Australia, Laurie Atayan in Brussels, and Paul Hicken in London. We will also be publishing today our year ahead outlook report that was harvested from the forum earlier this month, with all of these wonderful people's commentary included. So watch out for that on all the regular channels, and where you can give it that social media echo boost. Thank you so much, everybody. All the best.
Thank you, Sean.
Bye. See you, Paul.
See you in Dubai shortly, Sean.